Russian stocks have generated some of the highest returns anywhere in the world in 2019, despite a backdrop of subdued domestic economic growth and Western sanctions. To discuss the factors behind this performance, along with other developments in the country's capital markets, I'm joined today by Roman Lokhov, who is the chief executive of Russia's largest broker, BCS Global Markets. Roman, thank you for being here today.
Hello, thanks for having me.
So what is the story behind this growth in Russian equities in 2019?
Oh, this year was awesome for Russia, it's true. But basically you have 5 factors. So Russia started this year, everyone was afraid of sanctions. Russia was considered as a bad global citizen. But then in February, with a pull-off of anti-Russell sanctions and the Mueller document, this was not that bad. It was one of the core, basically, effects driving the growth. Then the second thing is, of course, it's Russian dividend story. So like it's still market or investors expect 6.5% on Russian index. The third thing is, of course, interest rates environment. Central Bank of Russia was cutting, interest rates went down, so causing significant rally in bonds market. And low interest rates environment is always good for dividend stocks as well. And of course, there are 2 more factors. This is acceleration of Russian economy, which started really slowly, but has improved in the third quarter with 1.8% growth. And we expect 2.2% growth in 2020. And of course, valuations of stocks. So it's still 6.5 PEs, yeah.
So there are a few factors at play there, and one of those you mentioned was this dividend story. So that is tied to the Russian Ministry of Finance pressing state-owned companies for dividends. Is that correct?
Yes, this is right. The dividend story is good, and this is very interesting to see the fact that also international investors started to see companies in Russia which are owned by state is actually a sort of guaranteed good dividend story, so that they can be sure that this money will not be invested elsewhere, but as government needs dividends, so investors can hope to get them as well.
Okay, so we've mentioned here that obviously the returns are very good and the growth story in Russian equities has been strong this year. But what role has the impact of Western sanctions on Russia sort of played on the capital markets environment in general? What kind of impacts are you seeing on the ground?
Yeah, you see, I mean, 2018 was a very difficult year, because living in the world where you expect strengthening of sanction every minute leads to the fact that everyone wants to reduce the risk, to hedge positions, you are more careful and you wait what's going on. But for the moment, the risk of sanctions in Russia has significantly declined. Moreover, sanction risk on emerging markets in Russia is part of emerging markets. You cannot just consider it, just as we saw for Russia. It became integral, in my view, because the risk on Russian sanctions has declined, but at the same time, there were other risks arising, like sanctions on Turkey or on China. So basically, this is a risk where emerging markets have to leave this.
In the Russian context, though, we were talking a bit earlier, Roman, about the retreat or withdrawal to some extent of the big global banks from Russia to varying degrees. How is that playing out in the market space today?
For us, we could benefit from that a bit. So generally, the story is, of course, not good. Volumes have declined, and a lot of big international banks either close their offices or significantly reduce their operations. But it does not mean that their trading volumes have disappeared. And we were able to help them and to service the majority of them through our London office, basically outsourcing their desk to us and giving them, so being the door to Russian markets.
Okay, sure. And then finally, Roman, IPO activity has been relatively soft, I think, in 2018 and 2019. Do you expect there to be something of a turnaround in 2020?
Oh, yes. In 2018, there were no deals. 2017, there were 4. We were participating in 2 of them. Now, Ministry of Economy introduced a plan, basically, for list of companies they want to IPO or SPO, including several large names like Sovcomflot or Aeroflot. But there is a probability that this program could remain on paper, because fiscally, Russian government does not need it. We have surplus for the last 2 years, basically. And the Russian government does not want to sell these companies with a large discount, which leads back to our history in the 19th, where basically Only several group of people could make vouchers. And for the moment, I think there is a probability that this program could remain on paper. Nevertheless, we see a good pipeline of companies which are considering to go public. The second quarter could be strong.
Okay, and that will obviously feed into opportunities for foreign investors looking at Russia as well in terms of foreign capital inflow into the country's capital markets.
So our investors, into us, we always hear three things. This is basically macro stability, good dividend story, and low valuations. P's are like 6.5, I think the lowest during the last 5 years. And with all of these factors, let us hope that the next year will be good.
Okay, Roman, thank you very much for your time today. Thank you.
Thank you very much. Thanks.